Bitcoin is at a critical moment. The charts are flashing major signals and long-term holders are making moves. Plus, today I unlocked the secret to the Bitcoin cycle. So memorize this concept: flat monetary cycle. So let's dive in. On this first chart, we have the flat monetary cycle, which has limited Bitcoin's upside. This Bitcoin cycle, we have largely been battling a flat monetary cycle, as I said, and unlike previous cycle, where liquidity was increasing, the past few years have been marked especially by tight financial conditions, and this has led to a more difficult environment for Bitcoin's growth compared to the previous bull run. And so this chart here suggests a multi-year bottom could be forming right now, which would indicate an end to the tightening phase that started in 2021. If this reversal holds, we could be set for a liquidity-driven Bitcoin parabola or a Bitcoin rally, if you want to say it. And 2025 might bring a shift in monetary policy, especially because of Trump. If liquidity starts increasing again, it could provide a very strong tailwind for this so-called next Bitcoin leg up. In the previous Bitcoin cycle, liquidity was in a strong uptrend, and this is what helped push Bitcoin's price higher. In this cycle, in this current cycle, liquidity has been mostly flat, and it's making it very hard for Bitcoin to experience a same or a similar level of rapid growth. And these red markings here at the bottom, they're highlighting a even atom potential formation, which is just a long-term reversal or potential bottom signal on this chart. Now, let's go on to our second chart here. This is marking the longest contraction of global liquidity in Bitcoin's history. And right now we've been going on this contraction for 3 years, and the previous tightening episodes lasted less than 2 years. And so the question is, how much longer will this go on? If you look at the chart, it's compressing, and the last time it broke out, we had the 2021 cycle. Obviously, we don't have COVID now. We're not going to have as much stimulus unless something breaks. And the so-called fiat fractional reserve system, the debt system, is going to implode without liquidity injections. Now, speaking of potential, it's very important to understand the 4-year cycle and its potential move in 2025. This chart is very important, and Bitcoin has been following this chart, this 4-year cycle, over a decade. And this is driven by the halving event, where you have less and less Bitcoin entering the market. This has repeated like clockwork, with major peaks usually happening about a year to a year and a half after each halving. And this chart is just comparing all the post-halving years, 2013, 2017, 2021, all of them to 2025. The question is history going to repeat itself? The 2025 one, which is the orange one here, the movement is tracking the previous post-halving bull runs in a very similar way, but still in a very early stage. And the other ones all had massive price surges, and they all reached cycle peaks in Q4. So we should expect a cycle peak in November, December, if we have a repeat of what usually happens. But here's the catch. Bitcoin is now $1 trillion asset. It's completely integrated into traditional finance and reliant on traditional finance. And unlike previous cycles, we have macroeconomic factors, stuff like interest rates, money supply, the stock market strength, and these all play a much bigger role. So if liquidity increases and the markets stabilize, Bitcoin is definitely going to explode. Speaking of long-term trends, here we have the Bitcoin long-term holder accumulation chart. After a period of selling, in the past month, as you see here, starting on February 21st, we've started seeing long-term holders flipping into accumulation again, and their accumulation has been steadily increasing over a month now. And speaking of good Bitcoin trends, we have this chart here, which proves that Bitcoin has remained the best performing asset despite the pullback. So this chart here tracks the return of various assets since the election and how much they have pulled back from peak levels. And BTC is at the top. And the peak return was 57%. And the current return is 48%, which is still higher than any other asset. The only thing that comes close is volatility, so the VIX at 18%. And then gold is just doing 9%. Everyone's sharing gold charts, but compared to Bitcoin, gold has done nothing. And now let's move on to this chart. This is I call this the young money chart. What is it showing us? When young money dries up, buying enthusiasm is fading, and the price will struggle to maintain its gains. And the blue area here is Bitcoin's real last cap held coins that are younger than a month. And this yellow orange bar here at the bottom is very low young money activity. And the red bars are extreme levels of low activity. What's happening here is there's a sharp decline in young money, and there's fewer new or recently bought coins that are moving. And this is just saying that momentum is weakening, very similar to what we saw in the 70K top. It's extremely similar. But we haven't reached those bottom or bear market levels yet. And we are hoping we're going to see a reversal here. Now, understanding the Bitcoin cycle extreme chart and compare it to our current situation. This will prove that we are not at extreme levels as well. So these red shaded areas, they highlight moments when Bitcoin reached extreme points in the price cycle, either overbought or oversold. And historically, these extreme signals, they predict major market reversals. And currently, we have no extreme signals, meaning Bitcoin is not overbought or oversold. Now, on to the next chart. This is showing us Bitcoin's price struggling near the 84 and 80K levels. And this is a major resistance level right now, and it's acting as a barrier. And this is called the CVDD channel, by the way. Last time we broke through it, we had quite the drop, actually. And we are now struggling to break through this 84 to 85K range because older wallets are distributing their coins here. A lot of old money is distributing their money here. So once they stop, and once we have a momentum, there's nothing stopping Bitcoin going back to 90K, 100K even. But the problem is momentum, and we need, let's see what happens at the FOMC today. But when it comes to charts, I think that's it. Now let's dive into the news. President Trump's executive director says that he wants as much Bitcoin as he can get. And this is just part of their budget neutral strategy and their budget neutral approach to acquiring Bitcoin, which just means obtaining as much Bitcoin as they can without impacting the cash flow. I'm not going to show the video because that's basically what he's saying, that they're going to acquire as much Bitcoin as they can in a budget neutral way. So it couldn't be more bullish. Then we have Michael Saylor's MicroStrategy funding more Bitcoin purchases with their new preferred stock. By the way, MicroStrategy is now just strategy. So strategy is raising money, and they're going to offer this new preferred stock. The funds are going to be used to buy more Bitcoin. The investors will get a 10% dividend, and they have the right to buy back shares under very specific conditions. How does this work? They offer 5 million shares of a special type of stock that's called Perpetual Strife Preferred Stock, STRF, they're calling it. And they're just going to raise money for what they call general business purposes, which just means buying more Bitcoin. And there's this 10% fixed dividend that's paid every quarter. And there's also compounded dividends if the company doesn't pay on time, and they can compound from 10% up to 18%. But that's about it. By the way, these also never expire. and the company does not have to buy them back. Now, these are very important Solana news. And I think this explains why Solana can actually destroy Ethereum's ETF. If it has an ETF, of course. But Kyle Samani from Multicoin Capital argues that a Solana-based ETF could perform way better than any Ethereum-based product, any Ethereum ETF. And this is due to Solana's fee generation and also lower market cap. Solana is trading at a price to earnings of $30 to $50, and Ethereum is trading at like 1,000 price to earnings, which makes no sense. And definitely Solana can have a better performing ETF with just better numbers. Like they're doing more fees than all of Ethereum. They generate a lot more activity. They have better user experience, and their ETF should do better. I think Calcimani is right. Now, onto Solana related news also, we have Radium, which is launching their version of Pump.Fun. It's going to be called LaunchLab. And LaunchLab is a competitor to Pump.Fun. Pump.Fun launched their own AMM to compete with the Radium. They were contributing with over 40% of the swap fee revenue from Radium, and they're stealing that swap fee revenue. And now Radium, to fight back against Pump.Fun, will compete with Pump.Fun, which makes total sense. They say they're going to have new pricing models, they're going to have more trading options, they're going to have flexible types of fees, etc., but they're just trying to retain their market share. And that's it for today. If you found this useful, hit like, please subscribe. I'm just getting started. And tell me where you think Bitcoin is headed next. And I will see you guys tomorrow. See you guys on the next one. Thank you very much.